Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, November 15th, 4:45 p.m. Eastern Time, coming to you from San Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the November 1st and 2nd follow-through days on the NASDAQ and S&P 500. See the trend gauge over here. We've got market leaders marked with the green arrow, plenty of leadership being displayed in the market. Not today, though. It was time for a pause for most leaders. We saw a lot of higher highs and negative reversals today. Things just seem to have gotten maybe a little too far too fast. Short term, all five of the major indexes are trending above their 21-day moving average. Green arrow there. Yellow arrow versus the 50-day moving average, as we've got the three big cap indexes above the 50-day, and mid and small caps now above, but the slope of the line still down. We'll stay on neutral until we can get that straightened out and see some strength. Needs to persist in those mid and small caps. We've seen recent improvement in breadth, but we need to see that continue. Long term, mild improvement today as mid caps closed above the 200-day moving average, but toward the lower end of the range today. Small caps tried to get above the 200 early this morning, ran into it, reversed like it was running into a brick wall. Need to see some more follow through there to the upside. So what happened today? Index is mildly green. We had PPI pre-market, that's producer measure of producer inflation. It was actually negative for the first time since 2020, 2021. I've got it on the tail of the tape. We'll see that there. And initially, big gap up in the indexes pre-market that faded a little bit into the close, or sorry, into the open. We opened up about 0.25% on the S&P, 0.5% on the NASDAQ, but really couldn't make any progress all day. The pre-market highs stayed in place, and we just traded in a tight range on the indexes. Big strength early in small caps was given back by most of the day. As I mentioned, ran into the declining 200-day moving average. Leaders worse than the indexes today, but a lot of them extended and pulling back today. We'll check out a few charts with that later. Here are the final numbers. Big 7 down 0.16%. Definitely not leading over the last 3 days. We've seen more breadth and broader gains outside of the Big 7, which is actually positive for the market. Tesla, however, continues for the third straight day to lead the Big 7, up 2.3%. RG8, this is our 8 growth ETF composite, was up a lot higher earlier in the day. Pulled back, still up just less than 0.5%. But FFTY, this is the IBD 50, down on the day. This reflected the pause in leadership stocks that I was commenting about. S&P 500, as I said, gapped up 0.25%, tight range sideways, closed still higher, but up 0.16%. RSP, equal weighted, beating the market cap weighted index again, up 0.47%. NASDAQ 100 up about 0.1%, was red during the day before a minor rally into the close. Equal weighted beat the market cap weighted again. And again, this is actually good for breadth. We're seeing gains in the average stock, not just the Big 7. QQEW up 0.33%. Dow led the way, up 0.47%. Mid caps up 0.46. Russell 2000 small caps up 0.16. Global diversified 60/40 stock and bond just barely negative. This was bonds dragging this down today as rates ticked up a bit. In-house GROTECTION down 0.20%. Our 3 highest individual tickers all down on the day. That's what dragged us to lag today. We'll take a look at that and the tail of the tape. Let's get right into it. We'll start off with the S&P 500. You can see here the higher high. Let's go to the 5-minute. You can see the gap up and really trending higher early morning, made a high of 45.21, then just kind of giving back a little bit, minor afternoon rally, really just a tight range from 44.95 to 45.21. That's 26 points, a little more than 0.5% range today. So tightening up a bit, not a surprise after the recent strong move up. Let's go to the NASDAQ 100. Similar situation, tested within a couple of pennies of the highs of this flat base, 387.98, before reversing, still up positively on the day. Down a third of a percent after hours as Cisco is getting hit on its earnings report. They lowered guidance, and also Palo Alto, a cybersecurity stock, getting hit also after hours. So a little bit of a headwind heading into tomorrow for tech names. Let's go to the Dow leader today, closing, getting above, but not quite closing above that 35,000 level. But as you can see, kind of a slingshot, as is with the rest of the big cap indexes over the last couple of weeks. Mid caps, okay, above the 200. Uh, Slight close above, but closing near the lows of the day. You can see we've got alert here at the 200-day moving average. Wouldn't be surprised with this being a flattish moving average if we saw a little bit of above and below, especially considering the huge move up yesterday over 5% in small caps in particular. And speaking of small caps, let's see the rejection here at the 200-day moving average. You can see we got above there. Would have been a nice place to take some of our TNA off, but we don't have a crystal ball. We're kind of riding with the trend, and pulled back for a minor gain on the day, but again, up 5 point. Well, that's not showing what the gain was correctly yesterday, but we were up over 5% yesterday before running into the declining moving average after today's gap up. Let's look at the 5-minute. Not actually showing the gap here, but it didn't gap up. It opened up 2/10 and rallied strongly before giving it up. Small caps. Okay, let's go to the VIX. Basically flat on the day, staying below this 15 level. That's good stuff. That's where the market has done most of its work. Positive work this year. Let's go to the 5-minute chart of the dollar. A little bit of a gap up, pullback, sideways action, kind of in line with what we saw in the indexes. But after the big move down yesterday, an inside day is really not a surprise at all. Moving on to precious metals, gold gapped up yesterday, down 0.25% today. Gold stocks, GDX down 0.5%. Silver today, 1.3%, getting above its 200-day moving average. Can it stay above? That's the question. Bitcoin, though, the big winner today, up 7.1%. Nice, approaching recent highs on the Bitcoin itself, above 36K. And after a disappointing day yesterday, complete turnaround today. Market strong yesterday, Bitcoin weak today. Market so-so, Bitcoin strong. We own 3% BITO. Let's flip the bonds now. The broad bond index BND, after a big gap up, giving some of that back, meaning broadly yields up slightly, down 0.55% on the broad bond index. TLT is the long bond, down 1.4%. We've got to wonder now if this gap up is going to be kind of like an island, and if it is, that would be a negative for the market. We want to watch this pullback versus the 50 and 21-day moving average. Really, right now we're in a trading range on bond prices after coming off the lows 2 weeks ago. The yield on the 30-year pulled higher by 1.54%. You can recall that breakdown from this triangle that I drew. Breakdown inside yesterday's range. We really don't want to get back into where this triangle was. That would be a false breakdown. A false breakdown in prices was good for stocks. TNX, talked yesterday again about this failed breakout turning into a breakdown inside day today. We want to continue to see lower yields. Will we? We don't know, but we're prepared either way. Tail of the tape. Let's pause this a little bit. You can hit the highlights. PPI falling 0.5%. As I said, that's a surprise. And it's really good. Now the Fed fund futures markets are pricing in no rate hikes for the next 2 meetings and about a 30% chance of a rate cut in the second meeting in 2024. That's in the first quarter. So interesting stuff here. Things change quickly in the market, and you've got to be prepared to change quickly with them. But PPI falling 0.5%, that means there's no inflationary pressure on the consumer. That's the CPI, the consumer price index, if the PPI is down. As I said, largest 1 month decline since April of 2020. So we're going back to COVID times for that. Day count up 11 out of the last 13, 11 days above the 8 EMA, 10 days above the 21 EMA. That's kind of on the hot side. Action, as I said, tight range chop all day. What sector stood out? Bitcoin strong, KRE regional bank strong, semiconductor strong, retail strong, as Target was up strongly on their earnings report, mostly because of cost cutting. On the downside, uranium took a break, cybersecurity took a break, utilities and oil services. From the portfolio standpoint, we added 2 additional starter positions, takes us up to 12 names. Here they are. I've mentioned recently that our ultimate goal is really to get, 6 to 10, 6 to 8 stocks that we can focus on that are true leaders, but prefer to cast a wider net at the beginning because you never really know which ones are going to be the leader, and then cut the laggards, feed the winners. And this is really a topic for discussion tonight, is selling into strength. Over at Ticker Monkey Chat, which is I highly recommend. That's Jason Thompson's. A lot of smart traders in there, and it's a lot of focus on IBD type approach. And this week, been stressing in there, going through some old interviews with O'Neill, and not everything that you buy is going to be the big winner. Everybody wants the next big winner, but O'Neill was known for taking his 15, 18, 20, 25% gains when he recognized that, stocks don't go up forever. You got to lock in those gains or the market will take them back. And this is probably one of the hardest concepts of the canceling approach, is actually taking those gains and then realizing that unless you're buying it at the perfect pivot, that 20 to 25% applies to the pivot. If you buy at 7% past a perfect entry point, you got to deduct that 7% from your projected gains before this thing is going to start slow down or basing. Unless it's a true leader, those are treated completely different. When I talk about true leaders, I'm talking about the way Nvidia acted last year, but they're not all like that. Most of our gains last year, you really apply the 80-20 rule to it. You're going to get most of your gains from 20% of your buys, and it's playing this little game at the beginning of uh, the beginning of rallies, is getting little positions into a bunch of different names and seeing which one is really going to lead, and then cutting the ones that lag. And then if it is not going to be a true leader, taking some off of the table. That's what we did with Netflix this week. It's what we did with CrowdStrike. And if they're lagging, like Celsius was, we cut that. We cut some Lilly today because it couldn't stick above that 600 level, and our third buy went negative. So we trimmed some of that today. So there's a bit of trading around a core position. Ideally, this is about the most names that I want to own. Really, 10 is about the most I want to own, but I'll let this play out and see which ones of these names are really going to be strong. DUOL was one that really acted strong on its earnings report, pulled back near the high volume close today. So we took a small position in that as a starter to see if it can settle down there and then turn and end higher. Similar with DraftKings, they had I didn't want to buy it because I knew they had a investor day coming up. It reacted positively to the investor day. We added to it this morning, or we bought it this morning, a small position. Ended up closing red by 1% by the end of the day as the market pulled back. But keeping the losses small, getting multiple positions in potential leaders, feeding the ones that are really working well, and trimming the ones that aren't. That's one of the most difficult concepts of, and not taking those profits. Everybody says, let your winners run. Well, they don't always run to the sky, and you've got to be reasonable about when to get out and lock some of those gains in, because the market will take them back. And then we've got the stat that all leading stocks correct on average of 72% after they top leading growth stocks. So uh, take your gains before, as I said, the market takes them back. So net the buy to DraftKings and DUOL, small starters, and added to AMD, small, trimming Lilly, mild increase from 1.54 to 1.61 in our portfolio exposure. But bottom line on the day, index is mildly green, leaders pause or pull back. And we'll see what tomorrow brings. But let's take a look at some of those charts now. So DUOL, first the buy that we did today. And you can see here, big move up on earnings, big gap out of the base on massive volume, 438% above average volume. You know what? Something is wrong with these numbers here. This is not showing correct numbers. So I can't really report it, but we can comment on the chart. This was massive move up on earnings, 3 days higher high, pulling back today 6.5%, above average volume, but within a couple percent of the high volume close. And it's also close enough to the 8 EMA, and we're oversold on the 60-minute. That is a spot that it should find support and hook back up. Let's take a look at that 60-minute stochastic, and you'll see what I'm talking about. I talk about this a lot. So this is a way to sneak into leading stocks. 60-minute stochastic, when it pulls back here beneath the 20 level, that's oversold. Can hang out there for maybe 3-4 days, sometimes just 2 days, and it hooks back up. And this often coincides with a recent support level, in this case, right above that 200, and the high volume close, which was right above 200, and or the 8 EMA, where within 5% of the 8 EMA. So taking a 1.5% starter in this, and uh, see if it holds up here. If it's a true leader, it should. If it's not, we'll be out with our usual small loss. Okay, DUOL added to that. DraftKings was a big winner on earnings. Went sideways a little bit, pulling back to the pivot. Moved up yesterday on volume with that investor day. Made a higher high and pulled back today, right at the pivot plus 5% area is DraftKings. Now, Lilly, on the other hand, both Lilly and NVO were weak today. Lilly closing basically right on the 21 EMA, holding the 50. This has been having a hard time making up its mind after its earnings report if it wants to go higher or not. Now, granted, it's had a big run. We might just be a little bit late getting into it, and if so, we'll be out with a small loss. Let's look at NVO also, which broke the 21 today and is sitting on the 50-day moving average. Last time it tested the 50, it spent 1 day beneath there, and that was right at the lows of the recent pullback before gapping up on earnings, trying to make higher highs, but it just quite couldn't get there. And now pulling back to the 50-day moving average. That's NVO. Let's take a look at some of the other leaders that we own that had pullbacks today. Let's start with Datadog, which is acting pretty well, but gapped up higher high and reversed close, still positive, but near the lows of the day. This is just going a little too far, too fast, and you can see this setup in many stocks right now, which was an earnings gap up, consolidation for 3-4 days, move out yesterday or the day before, just taking a break now. Notice that this is just getting to the top of the base, and that's the good thing about a lot of these leaders that we're seeing now is they're just now breaking out of a base or getting near the top of a base, which means if the bull market continues through the end of the year and is up 10%, should be able to see 20+% gains on some of these names. Some other things that pulled back a bit today, NVIDIA at 500 level or just below that 500 level and pulled back. AMD pulling back under that 120 level. Amazon pulling back. Microsoft had an analyst day, and they're coming up with some of their own chips to try to challenge Amazon's web services with their Azure cloud services. So Amazon pulling back today. CrowdStrike. This is another one we took profits on with the breakaway gap yesterday. It's below where we sold it, and it's down another 2% after hours in sympathy with the Palo Alto uh, move down on earnings. So That's Crowd and CCJ, another of one of our big positions. Normal pullback, near its highs, acting great. It's just pullback, and they're still above the 8 EMA. You can't complain if your stock is above the 8 EMA and it's pulling back. And let's see, that's everything we're going to discuss from a portfolio standpoint. And well, let's take a look at a couple of other ones that pulled back to Uber. And again, this gets into, and it's very difficult. This is acting fantastic. The question is this going to be a huge leader, or is it going to be one of those where you take your 15, 18, 20, 25% gains? And again, as I said, I don't always have the answer to that. It's one of the biggest things I struggle with. It's one of the hardest uh, concepts of uh, canceling, but an example of one being an absolute big leader was back here in February of 2023 when NVIDIA gapped up on one earnings report, acted great going into its next earnings report, and then had another massive gap up. And then continued to ride higher before forming this latest base. But this is an example of 100% gains here. If you got in down here in the low 220, 230, 240, getting up to 500, that's a double. We've got some taxable clients that are still sitting on those gains, about 90% right now with this latest pullback. So that's what you're looking for. And then these are the types of names that you feed a little bit more capital into. That's going to wrap it. As always, like to hear from you. My email is don@revereasset.com. My partner, Dan Stewart, dan@revereasset.com. If you're interested in talking to him about becoming a client, the phone is 855 Real Wealth. That's 855 732 5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. Right now, we're in growth mode, watching the pullbacks, trying to stay away from things that are extended, taking a couple of doing some offensive selling when things get extended, trying to get low risk entries on potential leaders, pyramiding into them if they start working, and cutting them if they don't. And with that, I'm going to wrap up the video for Wednesday, November 15th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.